Hello, guys. Welcome back again. I've got to show you guys the way to analyze the market again until you guys understand exactly how to make money and how to check the chart and get a nice, beautiful entry 1 to 2 to 1 to 6 to 1 to 7, whatever risk rewards you can make. Okay, so now let's go. So now we're gonna analyze euro, whether it's just the euro feature or the normal euro. Yeah. So let's say now we start from the normal euro, because I know some of you guys might be trading just the normal euro. So we'll start from here. You see guys, I had a loss down there. So loss is part of the game. Anyway, I don't trade this euro anyway. I just only trade the euro feature. But all I know is if you are trading from whatever currency you are into, you make sure you analyze it proper. Yeah. So now we'll start from here. We're on a 15-minute time frame. Yeah. Make sure when you're analyzing from the beginning, you go to your daily. Okay. Don't look at any other times if you're a day trader. If you're a swing trader and you want to hold it for like week, 4 days, 5 days, then yes, I'll recommend you to go look for weekly, monthly, wherever you want to analyze it from a long time frames. Yeah. But if you're a day trader, I would say start from daily and then you go down to 4 hour, 1 hour, then your 15-minute and your 5 minutes your entry position. Yeah. So now let's say we started from a daily and I'm gonna explain it to you guys. Every each candle you can see here is day. So that day that candle I'm on bearish was on Friday, and then now that one was on Monday when the week started. Then the next one is on Tuesday. So you see every candle is showing you a day. So that one candle, if you go to shorter time frame, it will show you more candles on every time frame you change, but it's equal as day candle. Yeah. So what we're doing now is we're gonna analyze a day candle now. So we look at the previous day when you want to take a trade on today. Okay, so if you are on Monday, you look at Friday, what the market was doing and what candle shape was the market was showing you. Was it bearish or was the market bullish? So then you can see what direction you more likely will follow into the market. Okay, so now you can see on Thursday, the candle is telling you bearish. So you highlight it from the top. Yeah. Once you highlight the high of the wick and the low of the candle wick, then what do you need to do? Because this candle now is telling you guys, look, like I said, if the candle is showing you bullish, you only look for bullish entry. If the candle is showing you bearish, you only look for bearish. To some of you guys who don't know what bullish and bearish is the blue candle, it means buy. And my black candle that I made is for sell. So if the buy candle is showing you blue and you know it's buy candle now because it's blue, you only look for buys for the next day. If the candle previous was showing you sell, you only look for sell the day after. Okay? I know you can see here a sell on Wednesday, but then how come sell didn't happen? Buy came on that day. I'm gonna explain it to you why. Okay? So that you don't get confused. I know some of you guys will say, oh, if you start easy and it's showing you sell, then I should go sell the next day. No, There's other ways to analyze on fair value gaps to check on order blocks, supply and demands, everything that you can mix it together. I mean, some of you guys who trade like ICT will trade like ICT, and some of you guys who trade SMC, you will trade like SMC. But my best recommendation I would say to anyone is mixed together, and then you will see the best result coming out from them. So now, anyway, once you see the bullish candle, the second time frame you go to is 4 hour. When you go to 4 hour time frame, what you need to do then, because this is the day that we highlight, the market was telling us bullish. So we need to look at levels in this area that the market need to come back down to before we look for a buy. Okay. So 4 hour time frame, we're looking for what? Fair value gap or demand. You see, guys, what I said to you is for fair value gap or demand. If you can't get none of them in this area, then you wait liquidity to sweep, and then you will obviously continue looking for a buy. Okay. So now you see in this candle here, it broke the liquidity of the previous low. But what we need to do, we will go, because let's say all this didn't happen, market started from there. We're looking for a buy, but do you want to go buy from there? Do you want to go buy from there? Do you want to go buy from there? No, you need to wait at levels in this area that the market need to come back into it before you rush to get into the trade. So you go to 1 hour time frame. In 1 hour time frame, it shows you here. Asian session started. The kill time zone from here 2 till 5 in the morning. So now you wait, because patience is the key, guys. I know some of you guys are not already awake in the Asian session, but whoever wake up London session, just wait until it gets to your level. But what you need to do for you to follow that previous day buy candle that was showing you it was bullish, you need to look from here any fair value gap. In 1 hour time frame also there's no fair value gap, right? Now we look at 30 minutes. In 30 minutes, there was a fair value gap there. Okay. There was a fair value gap there. But like I said, guys, always if you have a fair value gap in 30 minutes, look at smaller time frame, because that's not your entry. Remember. Now, this is beautiful. And I swear to God, guys, I'm gonna tell you now. If you follow it this way, I guarantee to you you will be making money. Because I'm mixing together supply and demand, which is the SMC strategy, and the ICT strategy. If you mix it together, I guarantee to you, brother, you will make money. Yeah. So now you got a fair value gap there within the half an hour that you analyzed there and the 15 minutes. Then we look for, if it breaks this area, how low can it come down to? Like how low can this trade can get down to it? Okay, the last sell candle was here, and that's the demand candle. Yeah. You highlight from there to there. Yeah. Now the last sell candle was obviously the last lowest in the candle, and all this now the next day starting. I do not want to rush and look for a buy, because I need to make sure it gets back to this area. So my entry level will be here, because remember, guys, I'm on my 15-minute time frame. I'll be entering from that area. The reason I have dots there, that is my discount level of my box that I created, when I highlight my supply and demands. Yeah. I mean, I've not created, guys, but I mean, I add it on to the box. You can add it on and you can take it out if you wanted to. But I add it on just to make sure it's my best position to get in from. I know some people can get in from here and some people getting from the beginning of the box. For me, I just wait and get from there. But if you want to be um, entering early, wait until it gets into the main box, the main line, or wait it gets here. And if you want to be more safe, wait until it gets into the last lane of the box. But I get in from there. That is me. Yeah. So now you keep your stop loss as it is, or you see if there's any other liquidity that you might think maybe it might take it out. You push it below. So let's say that was the last lowest. You just say below a little bit. If it takes out there, then fair enough. Yeah, it's gonna continue going down. So no point. Yeah. Your target now, where is it gonna be? Your target is gonna be the last previous liquidities, like all this here, here, here. But just not be greedy. I just put the first one there. Yeah. So look, this is what is up. This is what I was talking about. If you get a demand, or if you got a supply that follows a fair value gap, that is a diamond. That is a diamond. You make sure every supply or every demands that you get, you need to have a strong push that left a fair value gap, and then you wait until it comes back into that area before you getting into your buy position. Some of you guys will say, why we didn't take sell all this? I could have take sell from me. I could, but you don't know because your normal view that you had, or your normal analyze that you made for your daily was telling you bullish for buy candle. So why would I say I'm gonna go sell? Because if I take a sell here, I don't know, maybe you could go back from here and take this liquidity and take me out my stop loss. So I'll wait for a better target. Because even if I don't want to aim here, even if I don't want to aim the first liquidity, I can say, look, I wanted to take out the last previous buy side liquidity. You see, which is here. So because this is the sell side liquidity and that was the buy side liquidity. So if I say I'm gonna hold it until it takes that liquidity, also buy side liquidity, I'm in 1 to 4. 1 to 4 guys. So no matter what much how much money you're risking, if you're risking £100, you'll be getting 4 times 100, £400. If you're risking £1,000, you'll be getting £4,000. If you're risking £50 to people who have a smaller money, you'll be getting £200. So all I'm saying to you, if you know how much you're risking in every each trade, you will be making money. Because if you hit your loss, you know how much you're losing already anyway. So you're not worried, thinking, oh, is that 57? Is that 60? Is that my whole hundred and pound that I put it on my trade? Because when you don't know, you'll be worried. But when you know how much you're risking, you won't be worried because if you hit your stop loss, you know what you're meant to be losing on that trade. Okay? So yeah, that's what you need to do, guys. You make sure you analyze it like that. Okay? I'm gonna show you on gold, which I know some of you guys hate gold because gold is just madness sometimes. But then if you always stick to your strategy and you be patient, you will be making a lot of money in gold more than any other currencies here. Okay? So now let's move into gold. Okay? Okay, now we're on gold. Like I said again, we're on a 15-minute time frame. We're gonna go back to daily time frame. Okay, now we'll start from here. I know gold done the highest you ever been. Sorry, but how do we know, and how can we follow it? Yeah. Okay. This candle here was telling you bullish. Okay. We'll highlight this line and this line. Okay. So obviously it's telling you bullish. We only need to look for bullish candle, guys. So we'll go to 4 hour time frame. No, actually we need to go back on the next day because but anyway, We'll keep as is just to show you guys where your entry should be. So now this candle on that day was telling you bullish. On this day here, all you need to do is look for bullish. Yeah, you look at 1 hour time frame. Okay, so now you see the Asian session came down, London session came down, pushed back up a little bit, and the US session was continued taking out the liquidity fully. So when this happens, is the time that you should know this trade is no more longer going to be bullish. Because you know why? Because once you break the liquidity, if the candle body closes below the line, that means you need to only look for sales. So then what do you need to do then on that day? If you couldn't find the entry, you will highlight your demand. So this will be, I mean, your supply. So you're waiting this to come in here for Monday coming now. But let's say anyway, we was in this trade here, and then now we need to look for a bullish trade from here. We'll then go back to 30 minutes. In 30 minutes, we don't have no fair value gap, and there's nowhere we can more likely say this day should get back into this area. But we'll go to our 15-minute entry. Like I said, if you can't find no entry on that day, guys, there's no harm in to keep your money and walk away from the market. Yeah. So we'll go to 15-minute time frame. You see, there is no fair value gap with a beautiful demand or anything that you can see here that you're sticking this day should come back into here because let's see, you can't call this one a demand, so there's no strong bullish or buyers pushing up. Just went up, come down, and then start moving slowly. So in this area now, you can see there's nothing you can wait this market to come back into and head. So the only hope you have is to come and take this liquidity out, then wait the market to, if it breaks the liquidity and come back and closes inside the line that we have here, then you know obviously we have a bullish. Yeah, so you wait this to come back in. The candle closes above the line, so the wick is literally below, but the body is inside the line. You wait a next one start from there and close to come back in, and then you obviously look for more buyers like that. Yeah, if that's not happening, and the last candle that broke the liquidity of the previous day is literally closed, um, it literally closed below the line. That means it's no more longer bullish candle you can get from this trade. And also you had no other area that you could get in from. Yeah. So you leave it for that day. Now you know the market has changed. It's changed from bullish to now we only look for bearish. Yeah. So we'll go back on a daily as we keep as the same way that we analyzed on this one. So now we have this one. So we'll be analyzing here the sell candle for Monday. Yeah. Then we go to our 4 hour time frame. Yeah. So now 1 hour time frame. So in 1 hour time frame, look, we got a beautiful supply here. So we need this to come back here. We need this trade to come back in here before continue going down. Yeah. So anyone want to enter Monday, you wait this trade to come back in this area before you take a sell position. Your target should be here and your stop loss should be above liquidity. Okay. Okay. So that is how you should analyze, guys. We're gonna go and look for previous day from the daily. Okay. So we will remove this. We'll analyze this day here. So this candle was 10-year bearish, and what you should do, you only look for a bearish candle. Yeah. So if this candle was 10-year bearish, what you should do, you look for bearish. What you do now next after daily analyzing, and then you put wick to wick, you go to 4-hour time frame. Okay. Now you go to 1-hour time frame. Okay. What we're looking for is a fair value gap and supply or demand. Yeah. Whatever direction we go in. If we're looking for sell, we only look for supply. So now you see in here now we are on 1-hour time frame. We go to 30-minute time frame. We look for an area where we can think we can get in from the market. Okay. Because remember, guys, we always have to look at this day for this market to go back into for us to be looking for sell. So look, we don't have no fair value gap. We don't have no imbalanced area. In a 30-minute time frame, we'll go to 15-minute. We have a small fair value gap here. But that is on the previous day. So this one is the day before. So we need this day to come back because this one already been, filled in. So it's not counted. Yeah. Okay. So we're on a 15-minute time frame now, and we can see any area that the market more likely will come back into it. And gold obviously that is the highest it ever been. So there's nothing, any other thing from this side that you can check on and say, you know what, maybe it's gonna come back to this one or this supply or this fair value gap. So we don't know. Yeah. So like I said again, do not risk your money. If you can't get any clear vision or clear target that you can think the market could come back into this area, wait. Took the liquidity out. Okay, it's continue going up. Now what you need to do, you wait until it shows you change of character, and it's done it here. Yeah. So that is going to be your supply now. Yeah. And then what you do now on this day has finished. So we're waiting for the next day. So now that is the highest it ever been. Yeah. It came back down after that, and now it start pushing back up. But if you don't want it, like I said, we have another one here, and this is the best one because that is the strong sell candle that pushing down, and it left the fair value gap here. So you wait this one to come back in. So again, like I said, make your fair value gap line from here to that candle, push it like this. Now up to here. To the people who obviously follow the ICT strategy, they normally get them from here or from this line. And the people who follow the SMC, they wait until it comes into here or it comes into the last line. So what I will do is both of them anyway is working. Like I said, I'm not saying none of them are working, but it's about more, um, risk wherever you want to get them from. Like if you get them from here, you got more risk target you have, or if you're getting from here, you got less risk target. So now let's say we get them from here. Put our stop loss if you want here, or if you want to be safe, just say, you know what, I want to see the last liquidity. Your target up to here is this liquidity. That's not 1 to 2, but you can aim 1 to 2, and then you can just say, you know what, drag it in. Did it hit my target? Yes, it did. You see, So that's how you analyze, guys. Because by analyzing from here, you say, what, if it comes back here, then I can get into this trade, and it's gonna go in. If you not analyze it from here, you get in once, you touch the second time, and the third time you came back down again, and you continue down. Yeah. So that is how you analyze, guys. I'm gonna leave it like that now, and make sure you follow it exactly that way. And trust me, guys, you will be making money. Just easy, be patient, take it easy, and analyze it like that. Okay. I'll see you next time. Bye bye.